Good morning. Let's trade some Forex. Let's trade some US dollar. Let's trade some euro. Let's trade some Swiss franc. Let's trade some Japanese yen. Let's trade some exotics. Let's trade some gold. Let's trade some oil. Don't matter to me none. I just want to trade. Let's go. Trading circus, trading circus, trading circus, trading circus. Anyways, hey, good morning, everybody. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and risk not money. Do not risk money you cannot afford to lose. Hey, my name is Wayne. I wore my cufflinks for you. Cufflink Monday. Oh, I didn't even realize I got that one on. I don't know if you can see it. It's a chart. I have to do it this way. Can you see it? Oh, it's sideways. I don't know. I have a whole collection of trading cufflinks. Anyway, this has a chart that goes, up, 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 and it says buy low, sell, and the other one says sell high. Gotta love it. Anyways, I dressed up for you because you're my sweet baby. Been trading Forex for quite some time. I love trading. I love everything about trading. I think about trading over the weekends all the time. One of my funniest memories that I have of being a trader, and this goes back, oh my God, this must have been way before my kids. So this must have been like 18 years ago. I took my wife to the Ritz-Carlton. We lived in California, in the Bay Area, and so we drove over the hill and down onto the coast, and the Ritz-Carlton has one in, Half Moon Bay? Right on the water. It's basically like going to Scotland, right? So anyways, we're there, and it's our last night, so it's Sunday night, and we're sitting on this bench overlooking the Pacific Ocean, and the waves are breaking at our feet, down off this high cliff, and the sun is setting, and my arm's around her. And she says, "What are you thinking right now?" And I said, "The markets are opening." Like, I want to get home. Let's go. I got some trading. Come on, snap through this. Let's go. Speed the sucker up. So anyways, so that's been me forever. I love my dear wife, but I also need to make money and, pay for the love. So anyways, whatever. It's been part of my life for a very long time now. And so I still have passion about it. I still, when the market opens Sunday at 6 p.m., I had my phone open. No joke. I'm barbecuing. I got some other things going on. This is happening. That's happening. And I'm on my phone. I'm like, I was killing it. So I'm like, I'm super happy, right? So anyways, I can share all these years with you with the overriding goal of helping you become a success. There's no need to reinvent the wheel. There's a saying about, standing on the shoulder of giants, well, let's go, right? You got everything. So I'm trying to provide as many resources to you as possible for you to be a success. So please pay it back. Please visit tradersway.com. They make these webinars available to you here on the Forex.Today YouTube channel. So please visit tradersway.com. Open up a demo account, super fast, test out their execution speed, their spreads, and of course their swaps and all that kind of stuff. So give Traders Way a whoop, whoop, whoop. While you're on this video, please like, please subscribe, and please comment on the recordings. It's very important. If this community is important to you, you should help Google or in this case YouTube, make the right decision on which videos to promote and which not to promote. It's just right, boom, that's what it's all about. If you care about this community, leave a comment that helps YouTube sift through the thousands of crappy videos and say, you know what, this is the right one that you should be sharing with your world. Because now we all live on Google's world, right? So please do that, all right? So ask questions, get involved, and treat everyone here with respect. And things shall be good. Well, you know what I need to do? I need to grab this URL. Hang on. Hang on now. Select all, copy. Now I got to go over to here. And I got to click that. And then I go to here. Hang on now. Hang on. This is going to help. And wait, that ain't working. How do I do it? Settings. Do I put it in a URL somewhere? Visual, font, chatter, source. No. It's properties. Hang on. Refresh the current. Just trying to get the chat. Is the chat working? Maybe it is actually working. All right. So maybe I should just leave it. All right. So I was just trying to get that chat part working. I got my drawing tool ready. You guys excited? Okay. Trading circus. Let's get going. Let us begin. Well, how about this? Why don't you tell me what currency pairs you want to cover today? And I will try to do that. So let's do now like a quick poll, if you will. I know I can actually do a poll. I don't actually want to do a poll. Just tell me what you'd like me to cover and it'll be in the back of my mind, okay? Dollar pairs. Dow. I don't have Dow on this platform, I'm sorry. CAD yen, gold, Kiwi yen, all yen pairs. USD Mexican peso, pound Kiwi, Kiwi dollar, and exotics. Gold, peso, Enron just bullish. All right. Euro dollar, Aussie Kiwi, euro, oil, pound dollar, yen, CAD Swissy, euro CAD Swissy. Lots of CAD today, huh? A lot of kitty CAD, huh? Oil. Did you guys hear about Saudi Aramco? Has finally announced that they do want to do the IPO. It's coming up like in a month, and they're going to do it in Riyadh, or I guess it's not actually Riyadh where they list. It's Saudi Arabia, but it's a different city in Saudi Arabia than Riyadh. Forget which one it is. It's not Jeddah. Anyways, so they're going to list there. And now what happens when you're entering these capital markets and you're doing like investment banking, like what's getting done now. Okay, what happens is you go out on a road show and you start figuring out the price based on the valuation. So they're like, hey, we only have this many shares. Are you going to buy some, and what are you willing to pay? And they go around from banker to banker to banker to banker to banker on these road shows, and they try to price it out based on the valuation. So right now, the difference between the low end valuation and the high end valuation is over $1 trillion. And to give you an idea of that, in the negotiation of what the actual pricing will be per share, the difference is more than the value of Apple computers, which is the most, the biggest or highest market cap in the world. So the difference is more than Apple. So that's how far they're off right now, but I think it's really interesting. And we're only talking, I think, about 5% of the shares, but I think realistically what they're going to do is they're not going to get the price they want. So then they're going to say, well, there's only 3% of the shares, so that will drive up the price per share later. And then I think what they'll do is eventually, like 5 years later, then they'll list in London or in New York. Okay. So anyways, interesting. All right, so thank you. I think I got a pretty good idea. A lot of CAD, a lot of yen, quite a few cross pairs. Like somebody said Aussie CAD and stuff like that, and Aussie Kiwi, and like those are all my like really question mark kind of pairs, but I'll try to do it. Okay. So does anyone object to euro dollar? It's here. This is where I left, I think, non-farm payrolls. Okay. Well, someone said they're commodity pairs. Yeah, but why would you trade one commodity against another commodity, especially if they're complementary or actually the same commodity? So it'd be like, why would you trade a wheat versus a wheat, for example? Well, you can do that. So in my Series 3 training, we did a lot of questions on the exam that had to do with, Chicago wheat versus St. Louis wheat. So you might be long Chicago, short St. Louis. But of course, in the real world, because, that's how Americans still think, like, I'm not sure how much that goes down anymore. Maybe in 1943 that was important, right? But now you would be trading, American wheat or Canadian wheat versus Ukrainian wheat. And I know even 20 years ago, hedge fund managers were renting spy satellites that were decommissioned, because now the new spy satellites have even better cameras. So imagine cameras from the 70s, right? They're good enough, but they would rent time on these things. So as they flew over the Ukraine, the breadbasket of Eastern Europe, then the American traders would look down from space and see, oh, the yields are going to be low in the Ukraine this year. So they start buying up Canadian wheat and American wheat, right? So that's really, even that 20 years ago, that's what we do. But there's this idea that you can do these crack spreads, right? Or you can do Brent versus WTI, and sometimes they're coming together and you make money on the price converging, or the spread is widening, the spread between Brent and WTI, and you can trade that spread. But I know oil businesses do that a lot, but I'm not sure about these. So do you really need to trade Aussie Kiwi if you're not from Australia or New Zealand? Like, I get it. If you're Aussie or Kiwi, you do a lot of business with each other and you're always swapping currencies, right? I've had Australian family in my house, and they're asking me questions, and they've got apps on their cell phones where they're converting their Aussie dollars. Like, in some countries, foreign exchange is a big normal thing. But when I'm saying from a macro point of view, the two countries and the two economies are so related that it's the same forces generally, not completely, but generally pushing the values of those currencies up and down, or impacting the central bank, well, I guess the economy, and therefore the central bank, to put the monetary policy in such a way that, let's say, the correlation between the two could be extremely high. It could be above 0.75 to maybe, not 1, but, between 0.75 and 0.85, which means most of the time they're doing generally the same thing, and generally for the same reason. But they do move against each other. Okay. Whatever. So long conversation on that. But generally what I'd rather say is, this one's weak, that one's strong. Not like, oh, Aussie's a little bit stronger than Kiwi today, so I'm going to trade them against, but they might be both generally weak relative to everyone else. You see what I mean? So I try not to put those together unless there is a radical divergence in policy between the two, but I don't know if there ever really has been. I don't think Australia has ever been in a situation where they're cutting interest rates while New Zealand is raising interest rates. So when New Zealand's interest rates were at 8%, Australian interest rates were at 5 or 6%, and the thing is, it's not the rate differential really, it's the policy, the trend in those. So they're both going up, they're both high yield. Australia is going to get a lot of investment, New Zealand's going to get a lot of investment, and both currencies would be overvalued relative to the rest of the entire world. And that's what you want to trade, the relative difference against other major currencies around the world, not that Aussie is 0.0 new money coming in or old money going out, right? So that's just technical analysis. You could use the commitment of traders report, right, to look at money flowing in and money flowing out. And from that, when I do the commitment of traders report, Oh, I lost internet for 1 second again. Did YouTube cut us off? So it ran an ad and basically says that was the end of the... Why is YouTube so sensitive? I get dropped for 1 second. Why doesn't it reconnect? Oh, I'm still here? All right, cool. So if you use the Commitment of Traders report, the part of the COT data provided by the CFTC that I look at is large institutional investors, aka hedge funds. Okay? So maybe you just refresh, right? Okay, so everyone got affected differently. Yeah, YouTube is too sensitive. There should be like a 30-second rule or something, you know? But whatever. So like I said, guys, I've spent good money and I got all new stuff coming in, all new hardware now. And I will ask for a fixed IP address, so we'll see. All right, so let's go into here. So, right? For example, why would you trade Aussie versus Kiwi when you have a double top on euro dollar? Now, euro and dollar should not be highly correlated. Okay? So I don't think you face that risk. That's all I was saying. Like, you can trade Aussie Kiwi all day long if you want to. But you face sort of a correlation risk. And here I would not face as much of a correlation risk. So if you go back in time before Brexit, okay, and even before everyone totally knew the euro sucks, there was a time when I even fought for the euro. I'm like, the euro is the greatest thing ever. Anyways, back in the day, there was a time where if euro went up, right, something like 87% of the time, the pound would go up the same amount relative to other things, but they would go up basically the same. So like you would never trade euro pound at one point in history because, dude, why would you do that? It would either just move sideways or one would go up for a while, then the other one would come up for a while, and then the other one would go back up and you just get whipsawed and chopped to death. Why would you want that in your life, right? But anyways, I'm looking at this as like, this is a monthly M3, yo. I find that very interesting. I know this is an exit zone for these bulls, so I find that interesting. By the way, this is the entry. Should we cover that? Monthly pivot points. Okay? Based on pivot point theory that I teach in the swing trading group, which is the focal, the primary strategy of the swing trading group, this is an entry, and up here is the exit. This whole area is an exit. Beautiful, perfect, nailed it. 3 points, nothing but net. Here's the front run to re-enter, okay? So bulls have already entered this, is what I'm trying to tell you. Bulls already knew this. Bulls bought this and went up here and made money. Bulls did what they were supposed to do. Money in the pocket, already in Vegas, spending it, right? And then before even November even started, opportunity to get back in. Okay, great. So they're already back in. No bulls are left, except the cautious ones. Now, a cautious bull is going to wait for a higher high and buy the higher low. They'll buy the same price, but with significantly less risk. Now, the risk is bears say, "Nuff's enough." Nuff's, Nuffs, and then enough, ENUFF. Nuff's enough. Okay? That now this is going to basically do something more like this. So you're either a bull or a bear here, and you make your decision, and yada, yada, yada. Okay? Now, I think we all agree the European economy sucks, but how many people remember me talking probably this time last year? Because I remember this because I talked to my friend about it. Because, I have all my friends that want to talk money with me, right? They're like, oh my God, Wayne's at the party. I got to go ask him about my retirement account, right? So they swing on by, and they're, and at that time I was like, buy Europe because it's cheap and the dollar is strong. This must have been more like February, I guess, actually, thinking about it now, right? And buy cheap Europe, whatever. Does anyone remember that? I think it was more like February, because I was preparing. I said, well, let's go back. What would I say if I was me? I always say the stock market's going to crash early in the year, right? And then what? It wasn't until, when did we figure out that the Fed reversed their total opinion? Because I think, wasn't it like September, the Fed came out and told us they're going to raise interest rates forever, right? That was something they were saying about in September. And by the time we hit November, they were going to slash, right? So there was somewhere in there where there was a slap in the face. But anyway, so I'm getting to the point, quite some time ago, probably a year ago or close to it, maybe it was 10 months ago, we were saying you could buy Europe, not euro, Europe, because it's cheap relative to the dollar. Now, what caught me as I was saying this is the dollar wouldn't have been strong until the Fed was cutting interest rates. So was that November? You know what I mean? But anyways, here's my point. So at some point, quite a while ago, when these two things were happening, okay, it was January or February, almost for sure, but it might have been more like October, November. But anyways, DAX, the German stock market, is up 22% since then. Not the euro dollar, the German stock market. Now why? Why were we talking about it when we knew the economy sucks and that the central banking policy was to drive money not to worthless, but to be worth less than worthless? People are paying you money to take this off their hands. Right? Right? So imagine you're walking on a hike. You're hiking up a mountain. And someone says, will you carry this backpack full of bricks? You could, right? And they say, don't worry, I won't charge you for the experience. I will let you carry these bricks up the hill for free. Right? You're like, dude, I don't want to carry these bricks up the hill. And the guy's like, well, I'll pay you $10,000 to do it. You're like, all right, give me the damn bricks, right? So right now, at that point, if you did business with Europe, they're like, Europe was like carrying bricks on your shoulder. Like, you don't even want to do it. So someone paid you money, you're like, okay, I'll do it. You can give me the damn bricks, right? So I was saying, in those conditions, when the U.S. stock market, remember, everything is relative in what we do. When the U.S. stock market is at all-time highs, no matter what you buy, it's expensive. Okay? And then I say, imagine you're a hedge fund manager or a portfolio manager. You've been investing in the U.S. stock market since 2008 and 2009 and 2010, 11, 12, 13, 14, 15, 16, 17. Like, you already invested. Maybe 10 years ago, you got all the money on the line. You're like, what am I going to do now? If you get out of Apple at the all-time high and you have all this profit, what do? Buy Apple again? No, then you go through these cycles. Well, let's start building a defensive play in case there's a recession. Let's take a look at utilities and we'll go through, we'll cycle this money. But at some point you've cycled everything and you're like, you're just buying the same stuff, right? It's sort of like making $1 million selling your house, but now you got to go buy another house with your $1 million, and you never actually had the $1 million. And you're like, I don't feel any richer. I just changed houses, right? So anyways, at that point, what I was saying is you're looking at the US stock market and you're like, I've made all this money. So now you have free money because you made smart investments 8 years ago, 9 years ago, 10 years ago. And under your own guidance, because you have these things in your disclosure documents that say, you know, I can't have any more than 5% of the portfolio's value in one stock. And you're like, well, you bought Apple cheap and it keeps making money, and all of a sudden it keeps going above the 5% threshold. So you have to sell some, and now you got cash, right? So eventually you get all this money from all those great trades. What do? Put it back into the portfolio, but you bought everything worth buying. And then some stuff you don't even think that's good. So, and you still have all this money. And you're buying stuff at 30 times revenue or earnings, right? And then you look at Germany, and you're like, there's the second largest exporting nation, or the third largest exporting nation in the world. Sound banking and conservative culture and a trustworthy legal system and all this kind of stuff. And you look at good German companies, and they're trading not at 30 times earnings, but 13. And you're like, whoa, really? I think I'll buy that instead. And now you diversify, right? And I said, we're going to get to that point. And I said, I would buy German companies. I'd buy Dutch companies. Good luck with France. You can keep it. Right? But, you know, so like tiptoe into these things, right? So I'm wondering if that's happened now that, let's say, 10 to 12 months have passed. The economy sucks. The central bank is in emergency, right, policy, and yet the stock market goes up 22%. Why? Told you. That's why. Indice futures on fire, right? So that's how you do it, guys. You need to think about where the money's going and why, okay? But does anyone actually remember? I think we probably had this conversation 3 times, but how many people actually remember that whole thing? U.S. stock prices relative to European stock prices, and even though they're low, it can't go much lower and all that kind of stuff. And the opportunity to invest the money at low prices is worth the risk or the long-term duration of those investments and, you know, all that kind of stuff, right? Who would have thought with a down economy, right, and a central bank with emergency policies in place that the stock market would go up 22%, yet they're practically in recession? It's only money, y'all. It's only money. Okay. Cool. So anyways, US dollar is weak, and we found out from the central bank that they don't really want to cut interest rates anymore. Then we found out from the non-farm payrolls that the US economy is still adding jobs. So that says to the central bank, it's really difficult to cut in a booming market. Typically, when an economy is adding jobs and adding jobs and adding jobs and adding jobs and adding jobs, you need to raise interest rates. Okay? Luckily, since the rest of the world sucks, that keeps inflation globally low. Okay? So we're in this environment where the American economy is booming and money is free, or nearly free, practically free, right? Unless you live on a credit card. Here's the economy. Why do rich people get rich and the poor people get poor? Money is almost free in the United States, but if you're poor and you actually have a credit card, you're paying 22%. How come credit cards aren't like 6% and they're picking it up at prime rate, right? So like, let's say they're paying 2% on the money they're borrowing from the market, because that's all they're doing is borrowing it from the market, giving it to you, and now you pay. So like, let's say a credit card should be 10 or 12%, right? Right? Amazing, right? That it's 22%. You're like, oh my God, really? So there's one major reason. Because let's say a wealthier person wants to, let's say, do an addition to their house and they need $200,000. Okay? Of course, they don't put that on their Amex card or their Visa card, right? What do? Home equity loan, right? So the bank looks at your house, they're like, oh man, your house is worth way more than what you paid or what's left on your loan. We're like, yeah, we know. So they're like, oh, we'll give you your 200,000 and we're going to charge you 4.5%. Like, seriously. And you're like, cool. Where did the money come from? The invisible value of your house. You put up as collateral. It doesn't even exist. Well, if you live in an apartment, right? So anyways, you get it, right? Like if you live in an apartment, you never get that sort of free money that comes out of the air that you use for collateral. So then they give you hundreds of thousands of dollars or more, and then they charge you 4.5%, right? So like there's this ad I hear on the radio from time to time because I listen to Bloomberg Radio, and they're like, 80% of Americans carry a balance of more than $8,000 on their credit card because they're fixing up their house. I'm like, really? Who does that? Who fixes up their house and puts it on their credit card? Like, do people do that? Yeah, well, So anyways, whatever. It's just finance. I like the study of all of this, by the way. So again, what we were talking about, like the U.S. stock market is all-time high a year ago. Okay, what happened? Well, now we're still at all-time high, except it's higher than a year ago. But we were talking about behavioral finance, where the European economy sucks. The banking, the central bank is in emergency, right, mode to try to save the economy. Why does the stock market go up 22%? Behavioral finance will explain that. Simple, Americans are looking for a cheap deal because they can't get it here. But that's how economics works, guys. Right? So you go to the store. Here's a great example. You go to the store. I can buy a barbecue. Well, I have a barbecue, right? 10 feet wide, basically. Beautiful stainless steel. Awesome everything. And it cost me like $1,500. Okay? Then you go to buy a Weber. Made in America. Beautiful. Beautiful. Made in America. You get this rinky-dinky little thing for $1,500. Like not even half of what the other one is. Right? So there's a behavioral kind of process here. Do you want the ginormous one? Or do you want the smaller one? Now you can almost for sure bet that the smaller Weber is made significantly better, will last longer, has better parts. We got it. It's beautifully made. Thank you, American unions. Right? Great. But you get a heck of a lot more for the same price. You're like, I get a searing station. I can boil water over here. It's got GPS and Bluetooth. Right? Stuff like that. And you're like, does the Weber have Bluetooth? No. Right? So anyways, you start to make decisions based on sort of value. But this is what money does, whether it's a business, a hedge fund manager, and all that kind of stuff. You make decisions relative to this scenario. Like, okay, that's a really nice Weber barbecue made in America by Americans, right? And you value that. But then you're like, well, damn, this one's way nicer looking. And it's got Bluetooth. And you make decisions. And you're like, well, value-wise, this bigger one is nicer, right? Like buying spaceships. But, so do you buy Europe or not? You're like, well, I could buy Apple, but I could buy BMW. Okay? Most likely, I don't know the stock value of the German car companies. Like, I don't specifically own Mercedes or BMW through a decision-making process of mine. My wealth manager might have done it, but I don't know. So I don't know if BMW or Volkswagen or Mercedes are good buys relative to American. But I would look at it, especially if I could buy it in euro, not dollars, right? Or something like that. So whatever. So that's to me, it's all a behavioral thing. All right, so let's go back to this, and then I'm burning through a whole bunch more. Okay, if you are a bull, you should have bought it a couple of days ago. What can I say? Sorry. Okay, and if you're a bear, you should start looking for, on smaller time frames than a 4 hour, you should start looking for that. And find yourself, get short. Okay? Okay? Cool, right? Oops. So you just have to make a decision, guys. I know most of you still fight me on this, but you should know what you want to buy and sell, not as pairs, as currencies, before you even do it. So on Saturday, you should think, all right, based on XYZ, I'm a bear on US dollar. And then you go look for things to sell the US dollar against. If you can get to that point in your career where you've done some sort of analysis or even flip a coin, I don't even care. Honestly, I really don't care. It doesn't matter. Now, if you're going to raise money from investors, you're going to have an opinion. But if you just say I flipped a coin, that's not going to work. But if you flip a coin, your trading will get better. Okay? If you flip a coin and say, between now and the end of the year, I'm this or that, I'm a bull or a bear, you will do better, because you'll notice the market conditions are favorable to that or not favorable. And if you limit your trading to only trading your direction when the market is going in that direction, you will do better. Now, yes, you might have to wait 2 and 3 and 4 and 5 weeks to wait for those market conditions, but it will, for some period, go in that direction and you will make money. Some people will look at it and say, well, there's 5 or 6 weeks where I won't lose money. And that's the first step up. And then you have 2 or 3 weeks where you make money. So after a couple of months, you've made money. And probably worked a heck of a lot less. Okay? So anyways, let's move on. We could do some kitty cat because a lot of people requested kitty cat. So let's do it. Prince Philip says, hi, Wayne. Is it enough just to look at major pairs to look for relative strength? Yeah, I suppose. But it's a little confusing because major pairs are all dollars, right? So all that tells you is the dollar. So the way I organize my charts, and I think it's up on MetaTraders too, we have these, right? We have these scans. Scan Aussie. Why? It shows you Aussie dollar versus everything. CAD scan. CAD versus everything. Swissy versus everything. Euro versus everything. Pound versus everything. Yen versus everything. Kiwi versus everything. Dollar versus everything. Why? Well, you're basically indexing. Not basically, you are indexing. So, Canadian dollar versus Swiss franc. Canadian dollar versus yen. Canadian dollar versus Kiwi. Canadian dollar versus US. And from that you can say, based on this relative to these other currencies, is the Canadian dollar bullish, bearish, or neutral? Well, let's make sure they're all in the same time frame. So this is a 4 hour, this is a 1 hour. Let's make them all 1 hours because we want them closer to current value. Okay, 1 hour, 1 hour, 1 hour, 1 hour. Now, let's check the numerator and the denominator. CAD on the numerator, CAD on the numerator, CAD on the denominator, CAD on the denominator. Oh, good, that makes sense. So, if the Canadian dollar is strong or weak, the top two will be going in the same direction, and the bottom two would be going in the same direction as each other, but opposite of the two above. So, if the Canadian dollar is strong, CAD Swissy will be going up, CAD Yen will be going up, Kiwi CAD will be going down, USD CAD will be going down. If the Canadian dollar is weak, right, then CAD Swiss would be going down, CAD Yen would be going down, Kiwi CAD would be going up, USD CAD will be going up. Okay, so let's take a look. Let's analyze this with technical analysis. So since the market opened at right? It's kind of Since the market opened, it's kind of Since the market's opened, it's been Gave it all back. And what about this one? Are they basically the same? Well, these two are kind of the same. And this one's sort of opposite. And this one is not that. So we don't have a very strong and convincing valuation for the Canadian relative to everything else. So I would say it's basically neutral. Okay? And if you're like, well, I can barely see that, Wayne. Well, first of all, let's do something here. I don't want to hit the button because then often it reorganizes. So I just want to do this. And maybe it's easier to see on a 15-minute chart, okay? Because if you looked at this and you're like, I don't really see it, so zoom in a little bit. 15-minute chart, 15-minute chart, 15-minute chart, 15-minute chart. Okay? Cool. Is there a major trend here? Well, it's above the central, heading up, and then fizzling out. This one, not doing anything on a weekly basis at all. And it went up and then went back down, so we're back to where we were. So this went down and up, but if they were the same, right, then this would be double bottoming on the weekly central, but it's not. This one's not even using weeklies. So there's like, this is not technical. This is technical, but not the same as that. What happened here? Basically up, a little down, right? A little up, a little down. Is it kicking off any weekly pivots? No. Is there even monthlies on here? Yeah, there's monthlies. Is it kicking off any monthlies? No. Is this a technical trade? No. And then we go over here. Let's take a look at this. A little double bottom, a little high. That's great. So what has it been doing the last few hours? Well, it opened. It kind of fizzled up, kind of fizzled down. Is there a strong trend going anywhere? No. Is it down? No. Is it off any weekly pivots? No. Is it off any monthly pivots? No. Is this a technical trade? No. Should I be getting into this? No. Not worth my money. Right? You cannot look at trading like video games. Would these market conditions justify your involvement with money? Do you look at this and say, I know for a fact I will be profitable? The answer should be no. So you move on.com. Not interested. It doesn't fit my rules of engagement. It doesn't seduce me into risking money. Okay? If you were trading billions of dollars, this wouldn't be worth it. But that's not even worth $100. Where's my free money? What's the convincing factor? I mean, look, many of you guys don't even have fundamentals together, right? You haven't taken the fundamentals course at FX Bootcamp and stuff. So let's just say, I don't know, you understand there's some relationship with oil, but you're not quite sure what it is and all this kind of stuff. So let's just say technical analysis. Is there any convincing technical analysis to tell you this is absolutely for sure going up or absolutely for sure going down? The answer to that is no. Half of this has irrelevant information. It's just kind of floating by. I don't see anything that says I'm going to make free money. Free money because it's so obvious. What's the pattern? Where's the trend? What's the support? What's the resistance? Like it's just gobbledygook floating around, right? It's like stink in the air. You're like, where'd that come from? Where's that going? You can't tell. Who did that? Hey, whoever smelt it dealt it. There's nothing here. It's invisible. Only fundamentals, but that ain't going to make me money today. Right, pro trader? Where's my money? You should never say, well, let's give it a try. No! Show me the plan. What technical analysis made you buy? What, that's the pattern you're looking for? That's the pattern you're looking for? Like, where is it? Oh, well, that's the support I love. What support? Right? So, right? You got to be hardcore. Right? Like, you see my trades when, right? And I show you, and you're like, oh, look, he's short on the M3. Yeah, well, that's how you trade, right? Oh, he's long at the pivot. Yeah, of course. And right? So there's nothing there that you could show someone why you did it. Okay? Oh, well, I bet you it's going to go up because of oil. Good luck with that. Cool. Here's Aussie. Beep. Okay? Let's go to an hour. Beautiful trading, right? It's a beautiful trade. Don't let it get away. Yeah, it's a beautiful trade. All right. Cool. So what's next, yo? Let's analyze this. Let's look at weeklies first. Bear sold at M3, bulls bought at M2. Good job. Everyone did what they were supposed to do. Looks like both people had an opportunity to make money that week. Okay? Then look, bear sold at M3 like they're supposed to. They bought at M2. Oh, little hesitation, little hesitation. Notice never a lower low. This is the key of all this, right? Low, higher low, higher low. What's the next going to be? Higher low. What's the next going to be? Higher low. Okay? Do you see what I'm doing? The logic of all that? So there will be a higher low, right? Where? Here, or maybe here. Looking at this, we're kind of guessing. It could be off this move. It could be off that move. Here's the thing. We don't know, do we? We don't know. We don't know. But you can have a plan, right? That you could say, well, based on this area here, sometime this week I want to get long. That's a plan. If you're an uptrend, right? So you're a bull and you're a trend trader. But notice like this. It worked there. Okay, look at this. It worked there. Look at this. Worked there. Okay. So, will it work here? Yeah, I don't know. But what are you going to do about it? You don't know. I don't know. So what's your plan, Stan? Okay? That's what a bull should do, right? Up, 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 down, down, buy. Up, 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 down, down, buy. Up, 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 down, down, buy. Up, 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 up. So this week opens up, down, down. And then by Tuesday, Wednesday, or Thursday, you're looking for a buy and an up, up. Okay? No, Mr. Highfold, I can do that next if you want. Okay, so that's one scenario if you're a bull. Now, if you're a bear, you need to at least recognize we have one solid month of up, 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 up. So, do you just sell here? Beep, 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 video game, like I bet you anything this is going to fall? No, but I'll tell you what, you're starting to feel more comfortable with the idea based on a double top. So how about a lower low, lower high, lower low on our way down to 68? What do you stink? Smell like a plan? Okay. Well, baby G, that's what stop losses are for. Also, baby G, if you were a professional, let's put it this way, okay? Let's say you're a professional and you specialize in the Aussie dollar, okay? I've always recommended that. You specialize in the Aussie dollar. You are the Aussie dollar expert and portfolio manager for my hedge fund. So you analyze the Aussie dollar and its price action, but you also analyze all the economic indicators, okay? And you analyze the RBA, the Reserve Bank of Australia. You attend every meeting, you read all the meeting notes, you get to know the personalities of all the different people on the board who help make these decisions, and right? You are the Aussie expert. You have a pretty good opinion what is going to happen in all the November economic events. You know if the art, or you believe you know with certainty what the RBA is going to do for a policy. If there's a policy change or no policy change, you know with pretty reasonable certainty what Aussie jobs are going to be, what Aussie inflation is going to be, you know what impacts the balance of trade for Australia. Therefore, you're watching things in China and all these different things, and you're watching the real estate market, and you're watching, you know, all these things. So that because of your knowledge, you're able to filter through and say, yeah, well, we got that meeting, and I feel confident enough to place a trade before the meeting, but I'm going to use my stop just in case, right? But you know. And that's where I'm trying to get you guys, where you don't know much, but you know everything about the Aussie, or the dollar, or the euro, or the pound, or the yen, or the whatever. You are an expert, and therefore you have an opinion. Therefore, that's called a bias. And because of a bias, you know what you want to do. If you're a buyer of the Aussie dollar or seller, then you can use relative strength to know what days you should be just dumping the dollar and which ones you shouldn't be dumping the dollar. And you can look at the market and say, well, I'm a bear on the Aussie, but current market conditions are more bullish than bear, so I'm going to not trade this week or today, and maybe tomorrow will be better. And when you do see conditions change tomorrow, you fire for effect, sell the Aussie, and you make money. And then the conditions change. You're like, whoa, 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 time for me to take a break. And now you wait for the next bearish move. All because of your intelligence on the Aussie. That's how you trade, by the way. This is how traders make money. What everyone else does is run around the charts like a chicken with their head cut off, making a bloody mess of everything. Right? Buy, 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 sell, 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 buy, 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 sell, sell, buy, sell, 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 buy, buy, sell, sell, sell. Right? Like, dude, seriously? You got to trade like an adult. I'm not talking about you, I'm talking about them. Right? So anyways, we'll get there. So we have a question, we had questions about peso, about rand, about lira. So let's just move over and do some exotics, and then we'll circle back and do some commodities, okay? All right, cool. So we will do peso, no, let's do euro rand first. Okay? So we had this written around, remember this? It's so long ago it doesn't fit on the chart anymore. I said we need to start selling it as we approach 17. How many people remember that? That's actually how it looked. We also looked at November's monthly M3 when we were in October. And I went through with great detail and furious anger, right? No, not furious anger, but I went through great detail to show you that we were basing our technical analysis based way out in the future. And I was incorporating both technical analysis and the psychological level of 17. Now, a week ago or wherever, when we hit this pivot point was actually just above my entry. And the reason it's moved is because it was still adjusting to October. So it looks at October's low, October's high, and then October's close, and then sets itself in stone. Well, we did this a week before it actually happened, right? So it fell this way and then contracted in, and then November 1st on Friday, locked in stone, but I was already short. So there's that. By the way, what do you think? We did all of this in real time, holding hands. How did we do? Even though that was a crazy move and it knocked out probably 2 or 3 trades for me at break even, how did we do about staying focused and staying calm and using not just past technical analysis, but future technical analysis, and put together, even with a psychological level, put together a trade plan that was tradable? How would you grade that? Even though after this velocity, which is redonkulous, it went from 16 to 17 in like 2 days. Raymond got it at 16.95. Sweet. That's better than me, isn't it? I don't even know. It's about the same, I suppose. I mean, that's how you do it. Real time, guys. Okay. Cool. So what would you do now? Are you a bull or a bear is the first thing I'm always going to ask. Okay. Look, let's look at it from a bull. You want this to go up, let's say. Well, you're going to look at this level, right? Okay. That's going to be your roll reversal area. Oops, I didn't want it to be that fat. That's going to look not like I wanted. That's better. Okay, that's that. What's the next? What's the next support technically? There's this on a monthly basis. There's this on a weekly basis. So I think we can combine the two. What? And I think if you were a bull, you would look for something like this. Am I right? Okay. If you're a bear, how are we going to play this? Well, let's mark our lines. This is our weekly entry. This is our monthly entry. And then way up here, there's like maybe this kind of stuff, but I don't want to even look at that. Okay? So I would stink something like this. A bull's going to try to buy it because they're bulls. Bulls always try to buy it. But then I'm going to dump it like this. I'm going to take them down. I'm going to break their spirits, and we're heading down like this. In a blaze of glory. Oh, you can't see. Oh, look at that. You can't see it. Hang on. I can adjust. Hang on. I just noticed what you're saying. You are not alone. Let's do this. Hang on. Hang on now. Sorry, I have a crazy wide screen. Okay. You see this much? My screen's this wide. So anyways. Okay, you ready? Let's do it again. If you were a bull, you are if you're a bear, you expect bulls to do this because they're bulls. They're going to try it. If they didn't do it, then they're not really a bull. Okay, but you're a bear. You like this on a monthly basis. You like this on a weekly basis. So you are going to then punish them for their stupidity, and you're going to take it down to this level and break their spirit because no bull should buy below that. Okay? And therefore, you're really predicting a confluence of this bottom and this support and this support. So you're pretty sure you're going to get at least to this area. Okay? So, Okay? So that's that. So I'm selling at 17. I might go to 16, but you know what? I'm not in it time-based. I'm based on or price based. I'm in it calendar based. So I have a decision. I'm going to be short this another 6 weeks. And depending on what happens in 6 weeks, and by the way, I think this is really what's going to play out. I think we'll be down here. Okay, but 16 is here, so I'd be a fool to ignore that, right? But anyways, I think if we're down there, or if we breach below 1580, I'll have a decision. I might want to be short this forever. Okay? So if you missed the first one, guys, and you're a bear, you're looking for this. Now, it's going to take 2 weeks to get down there, but, you know, you get this, you get this, you'll get this, you'll get this, you'll get this. And then this is going to be a challenging time, and this is going to be a challenging time. Okay? But I might just get lucky, and it does go all the way down here this week, like it did last time. So someone was in panic mode here, which only gave me an opportunity. Why was it an opportunity? Well, first of all, someone was in panic mode. There was blood in the streets. And, you know, if I was in Top Gun, I'd be Iceman, not Maverick. So I'm up here and I'm like, you're such an emotional fool. I'm going to destroy. I'm going to destroy. I don't miss. And boom, easy. Why? I'm a bear. Under no circumstances would I be a bull. That's how certain I am. So I'm like, oh, I'm going to dump this up here. Cool. I dumped it here. I dumped it here. Oh, and I went up here. Great. I'm going to dump that too. Whatever. It's easy. Why? I have a bias. I made a decision. Very easy. Not the technical analysis, not the fundamental analysis, but the fact I made a decision makes my trading significantly easier. All right, here's our Euro Rand. So let's click in a couple here. Click, click, click. Sounds like Kanye. Okay. So what are we doing? Well, here's the sell zone. Oops, let's do this differently. Delete, let's do it pink. And I guess we got to click in again here. Let's give it another click. I put scissor doors on the tour bus. Okay, anyways, this is my sell zone if I'm a bear. Cool. Done. For this to work out, I kind of need positive global macro. What would that be? Fed nearly done, but done for now policy. And big U.S. jobs, which further enforces the current probable policy of the Fed, which is pause. Not cutting or not raising is a policy change. So Fed jobs says dollar weakens. Dollar weakens, good for Turkey. Why? Because Turkey took out loans in euro, but they also took out loans in dollar. So it's the same problem, except this cost me more than that. So therefore, it's the same trade, but I make more money on the euro lira. So it's all good. So I stay short, and I expect something like this week. Cool. Okay. Closest trade on this one is I'm short here, and the other one is I'm short here. And the other one's like 1,000 miles above that. So any reason I should panic? No. Any reason I should get out? No. Okay. And that's about it. Shouldn't you move your stop now? No. Nope. I don't care about the pips. Cool. So I'll give you an example. I mean, I do care about the pips, right? So let's look at this. I do want to stay short for a while here, but not based on technical analysis. So I don't want to get knocked out. But if I get knocked out, it doesn't matter because I'm already earning, right? But if you remember about, a week ago, maybe 2 weeks ago, this portfolio was up $2,000. Now it's up $3,000. So in about the last 10 calendar days, I made about $1,000. Sorry, 1,000 pips. Okay? Doing nothing. But that's what rich people do. Not that I'm rich. I'm saying money makes money 24 hours a day, 7 days a week, right? So I didn't do anything. The money did things for me. So the money, I might have added one trade to that, but that's not what's going on. That one trade didn't make 1,000 pips. So the portfolio made the 1,000 pips. Another way of looking at it is the money made 1,000 pips. I didn't make 100 trades that made 10 pips each. I didn't make 10 trades that made 100 pips each. The portfolio, which is just money, and I have all my stops at break even, so I can't lose any money. So I'm not doing anything. I'm not risking anything. But the money made 1,000 pips in about a week or so. Ah, cool. Right on. Thank you, money. I appreciate you. I love you, money. But I do. I love money because of that. I don't love money because of greed and all that kind of stuff. I love money because money makes more money, and the more money you have, the more money you make, and it becomes a problem. You're like, oh my God, I'm making too much money. What do I do with all this? And we know the opposite's true. When you don't have it, you're like, if I only had it. So when you got it, you got to keep it. That's why over the last 2 or 3 weeks, or even the last 2 or 3 months, I've been doing conversations about, like, when you have it, don't spend it. You see what I mean? If you got it, don't spend it. Let money make more money, which makes more money. And then when you decide to spend it, it's free money that the money made for you. And you know, in a certain amount of time, all that money you spent will just come back. But you didn't earn it. You didn't do anything. You didn't build anything. You didn't offer any value. It just made more money. And you're like, cool, I'll spend that free money again. And that's where you want to get everywhere. Everything in your life should just be, all right, if I spend this money, how much more money will I get back? So when you look at the TV at the store and you're like, I really want this 75-inch 4K TV. Really? How much money is it going to make for you? That's how you should walk through the store. Now, I'm not very fun when I go shopping because that's how I think. I have to think, like, which pips were these? Right? And I'll say, oh, Turkey bought this for me. Thank you, Turkey. Right? That's how you should be. And then, even when I mean like that, let's kind of look at this. I could say, all right, Turkey has been kind enough to give me almost $550. See, I don't spend this. To spend that, I would basically, I could take it out of the opportunity cost, but I don't want to get out of this position. So I could say right now, I could go to the store and buy something I want for $545. And I'll say, thank you, Turkey. And guess what? Tomorrow, they'll give me more money. Almost like in your mind, you can put this to zero. And say, I have this $550 TV on my wall. So it's not a 75-inch, but you could probably get a 60-inch, 65-inch. You can probably get that in America. I could probably go to Sam's Club right now and get a 65-inch 4K TV for $550 or something close to it. Put it on my wall. So then I have to, in my mind, put this to zero. It's just accounting, right? Just using an accrual method of accounting and say, this is now zero. I converted this swap to a 4K TV on my wall. Thank you, Turkey. But I'm still in the position, and then the next day, money gets put into the account. You're like, thank you, Turkey! And that's how you want to get. And I learned this actually from extremely wealthy people in the Middle East. And they taught me this right away. They're like, you never touch the principal. Never. Okay? The swap, so to speak, pays for the $100 million yacht, but you would never spend $100 million on a yacht. You see what I mean? So the way that these investors were teaching me, really, because I was still a fairly young man back then. I was only 30-something. But they're like, it's all about the principle. Right? So you have to look at your lifestyle and say, how well can I live on a certain amount of money, right? And it comes down to like, dad gives son an endowment at a certain age, and the endowment is a portfolio of companies or a portfolio of stocks or some real estate in London or something, right? And they go like this. So this conversation, the one I'm actually thinking of, this young 30-year-old man received an industrial lubrication company from his dad. He turned 30 or something. Here you go, son. You don't give your kids money because you don't spend money. You never spend money. You have to live on income. So the gift was a company. You now own this industrial lubrication company in Dubai. And the kid's like, this kid's like, I don't know anything about industrial lubrication. I don't want anything to do with it. I don't want to go to the office. Like, it was like almost disgusting. Like, oh my God, to go to a job? Not interested. I just want to build customized Lamborghinis. That's all he wanted to do. Something like that, right? But here's the thing. The business every year produces, I forget what it was, let's say $5 million profit. So what he's saying to his son, here you go, son, find a way to live on $5 million a year. Good luck. See you at Ramadan. Figure it out. Like, done. You're out of the house. Try to find a way to live on 5M. And that's how it works. I want you to look at your own, like, what's your principle? What is producing the income? And then live on the income, not on the money. So this is me kind of answering that question, like, shouldn't I move my stop and stuff? No, I don't want to get out of these trades. I can't lose money, but I'm not interested in the money. I'm interested in the income. Okay? Now, just multiply all this, just small. These are all tiny little trades. This is an oopsie trade, a small finger trade. This should be $240. But anyways, these are mini lots. Entered one at a time on an account worth, at the time, $35,000. How many people think they could be trading a lot size bigger, okay, than one mini lot if you had $35,000 in your account? One trade at a time. These were not all like boom, 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 boom. One at a time. How many people would trade something larger than one mini lot? This is a food for thought kind of question because I want you to think about this income. Okay? So imagine you decided one trade at a time, one standard lot. Okay? That's it. One standard lot, one at a time. That is, right? So you enter this, move your stop to break even, enter another one, move your stop to break even, add another one, move your stop to break even. So it takes months to build this up, right? Well, let's say weeks. It takes weeks, a couple of months to build up this many trades. By the way, I asked you to, if you were with me over the summer, I asked you to and I prepared you to build portfolios. But anyways, what I'm trying to say is, imagine this was 10x. Now this is actually supposed to be 200, not 240, so 200. So I would be sitting on $30,000. Oops, come on. $30,000 here. Okay? Yeah, it's too much risk. So that might be too much, right? So now you throttle it back. What if you traded 5 mini lots instead of 3 mini lots? Okay, you see what I mean? Like maybe that's more reasonable. So in 6 months, you're up 50%. But check this out. Everything here would have a zero on it. You would have $5,500 here, right? So on and so forth. Okay? 5,500 on that one trade and swap alone. Plus you'd be up $11,000 in pips. Okay, on one standard lot, or cut that in half, right? So you'd be up, let's say, 2,500. This is bad math, of course, but rough. Like 2,500 in interest, and you'd be up 6,500 in interest. That's not right either. 6,000, not even less than that. So let's say 5,500. Let's delete that out. Let's try to make it, it's bad math, but let's make better math than that. So 5,500, right? So what is that? 6,000. So you'd be up $8,000 on a $1,000 investment on one trade times your entire portfolio, right? Like, you see what I mean? Like, all of a sudden, after a while, this income matters, doesn't it? Well, no, you could take that far. My point is, I'm not trying to do it that way. Do you guys remember the infomercial on television in America 25 years ago where the guy said, you take one free ad that you place in a little newspaper, the community little newspaper they throw at your door. You don't even want it. The trash, right? The stuff you give to the birdcage. He's like, you place one tiny free ad and you put in a 1-900 number. Okay? The ad's free and it goes out to thousands and thousands and thousands of households. And you make $1. He says, well, then you take out 10 and you make $10. But if you had 100 or 1,000 or 1,000,000, oh, it was Don Lepre. Good job. If you had, right, 1,000,000 of these ads, you would make $1,000,000, right? And the thing is, like, do you know the logistics of placing ads in 1,000,000 different newspapers? You're like, good luck with that. But, I'm not trying to be a Don Lepre here. If you had 100 lot trades, you'd be a billionaire by now. Look, I know the fallacy of that. That's not what I'm trying to say. I'm trying to say that most people are focused on this, but you can get focused here, especially in the exotic pairs, right? And I'm saying, okay, so you might find that 10x was too much. But 5x might have been fine. These could have all been 5 mini lots. Okay? Which means I'd be up $11,000. At some point, right, it gets kind of worth it. And here, I'd be up $2,500 in interest only. Okay? Then I want you to think of, okay, that's you and your situation now. Okay? What I want you to think of is, what if you were an institutional investor, like you were running a Forex fund, your fund, right? Under Jack Cap. And you're trading other people's money. Let's say you have $1 million. If you play a longer term game with a bigger point of view, which means you're going to need some fundamental analysis and strong understanding of central banking policy, but you could put this into play where it works really good for you, because if you had $1 million to get decent returns when you're scalping or spot trading only, like a 15-minute chart and a 5-minute chart and a 1-minute chart, and you make a bunch of trades today and then you walk away and you go home and there's no trades open, and then the next day you show up and you make 3, 4, 5, 6, 7 trades, and you made pips or you didn't make pips, and then you go, you will never make a return that will justify your investors investing with you. It just simply won't work. And if you don't believe me, just do the math. And if you don't know how to do the math, maybe that's the problem. Okay? But a longer term game doing this, where you make, let's say, one investment a week or a couple of investments a week, you remove the risk from the trades after a day or two, but all these trades are based on fundamentals and your analysis of central banking policy and the divergence of these policies. And they run, and then you remove the risk, and then another week or two you have one or two, and every so often you get knocked out at break even, but every once in a while you catch trends. When you're not in the office, listen to me guys, when you're not in the office, you're making money. Like, how difficult is it for you to scalp 1,000 pips in 2 weeks? How many of you guys feel like you can do it? You can knock out 1,000 pips, and not like this fractional pip nonsense. A pip is worth $1. Okay, not 10 cents. Okay? It's not easy. Even if you're good, it's not easy. Okay? Now, if I could do it not doing anything, it's a better return per hour of your time to do it doing nothing versus you doing it for hours and hours and hours and hours, and all the time having this risk where you'll lose money. See, I might lose opportunity profit, right? You understand, guys? Like, this may go this way and this drops to $2,000, right? And it probably think. Okay. Yeah, well, to scalp properly is a different question. Like, you certainly can do it, but I wouldn't do it as a career, right? But yeah. Uh-oh, lost you guys? Okay, let me know when you guys are back. It dropped for 1 second, guys. 1 second. It went bloop and then back. Bloop. Okay. Strange. Well, like I said, I've ordered. Everything gets fixed tomorrow afternoon. So hopefully we can get a better thing. Okay. So what I was saying here is, I don't want to be ignorant of this just to get this. But this is guaranteed, right? This is money done. And more of it's coming today or tomorrow and the next day and the next day and the next day. Okay? If I get the fundamentals right, then I also know that there's seasonality to this. And somewhere around 12, 19, I'll probably exit. And this, at that time, might either be 2,000 or it might be 4,000. Would you guys agree with that? That one of those scenarios is extremely reasonable. I'll be somewhere between $2,000, $3,000, and $4,000 profit. If I do nothing to this portfolio at all, which means I'll either make another 1,000 pips or I'll lose 1,000 pips, but I won't lose money. I'll just lose the opportunity to get out at 3, which I could basically do now, right? See what I'm saying? Okay, and I want to make sure you guys understand also that I'm not bashing scalping. Okay? I'm not bashing scalping. You need to know how to scalp. Sometimes I scalp for boredom. I'm sitting on my charts anyways. I'm waiting for something to happen. I'm like, oh, I can pick up these 25 pips, right? But you understand I'm not over leveraged, so it's not a lot of money. Okay? All right. Could somebody ban this a-hole? Right? So it's not a lot of money. So it's just you can do it. Pick up. They say when Bill Gates walks down the street and he sees $100 bill lying on the ground, he doesn't pick it up because it's a waste of time. Right? Because he stops and he would have made more money just going to his job, right? It's not quite that, but you shouldn't be risking enough money where it's interesting. If you're doing anything that is interesting, you're screwing up. Remember, I tell you all the time, your Forex trading should be boring. So if you're like, if you go, yeah, boom, I just scalped $200, you're not worth the $200. That's the problem. Okay? If you're like, oh, I could buy a bottle of wine. You're like, that was cool. Then now you're worth that money, right? Like, it should be no big deal. Right? Like, now I can pay my rent. Whoa, dude, you're not trading properly. Right? Or even worse, I lost $200 and I'm going to get kicked out into the street. Whoa, dude, whoa. Then you shouldn't have been trading like that, right? So everything should be boring. So if you're sitting waiting for Shanghai to open and you're interested in, where things are going to be, and maybe you'll place a trade before you go to bed and you're waiting for it to come out and you're like, well, and then you see a trade, you're like, all right, I'll take it. Right? You're like, yeah, why not? And you're like, oh, made 25 pips, right? And 25 pips should be, but it shouldn't be like, yeah! Right? Woo! But you see it all the time in like ads that people send me, right? Oh, we're so good. We made over 150 pips this week. You're like, that's embarrassing. Why are you pitching me on this, right? We made over 225 pips last month. That's embarrassing, right? But they trump it up as a big thing. Like, well, if you were only trading with us, you'd be rich. Like, not on 200 pips a month. What the hell are you talking about? Oh, well, if you jack up your lot size, they're like, oh my God. Right? But it's amazing that these things exist out there. So I want you to get used to the idea, like, if you pick up 25 pips scalping the Shanghai Open or the London Open, that's cool, that's all right. But, like, it shouldn't be a goal. It shouldn't be interesting. It should just be, like, a time filler. But the part of scalping that's important is if I'm a bear and I want to sell this. Okay, let's just use lira here on this one, euro lira. Okay, if I'm a bear, I knew this was resistance last week. I knew this was resistance last week. I knew this was resistance last week. I knew this was resistance the week before. Well, that's why I sold it. Okay, you see what I mean? So this is simple in M3. This is a central pivot point. Remember, I was a bear here. I was a bear here. I know I was a bear here. I was a bear here. I was a bear here. I'm a bear now. I'm a bear. I'm a bear. Like that, that's the easiest part, right? These are all easy entries. Now, I wouldn't enter any of these on a 4-hour though, would I? So how did I pull the trigger here? Well, look, because of my, raw analysis skills. Look, guys, I had 16 hours to set up my short trade. 16 hours. Okay? And we know because of front running, that's a great front run. We know this is a front run. Okay? And I can't see it now, but that was probably a front run at some point. But anyway, so let's put it all together. So I'm a bear now. And I sold here last week because I'm a genius, or maybe I missed it. Doesn't matter. So what about the next trade? So I'll say, well, I'm thinking maybe a second trade. Let's do this in big. Let's do a second trade somewhere around this pivot. And that would produce a lower lower low, lower high, lower low scenario. And of course, my support that I got to breach is kind of this zone. So I know where I'm going to be challenged and I know where I want to sell. Good. Strategy done. You ready for some tactics? Oh, I'm going to ban this guy. Hey, by the way, spammer, I know if you can hear me, you should be ashamed of yourself. And I know your mother is. So you need to go find your mother and apologize. And you're not welcome here anymore either. Bye. Good. Banned. Banned. Gone forever, spammer. All right. Yeah, I'm sorry for your mother. I heard a stand-up comedian, I think it was yesterday. He said when he was 2, his parents divorced and there was a real battle over child custody. He said that his mother lost, so she had to raise him. Anyways. Oh, was I a little snappy on that one? Maybe it was a bot. Well, all bots have mothers. Okay. All right, cool. All right, so you see now, I made a strategic move. Does anyone know my book? Strategic and Tactical Forex Trading. Okay, so I made a strategy play. Now I got to jump in tactically. Okay, cool. So I know my line. What's my price, yo? This is my price. Okay, by the way, you may have already missed it. As you can see, this is why you should be on smaller time frames as well as longer. Right? This is why we look at multiple time frames, what I call fractal geometry. Okay? Anyways, let's bust out the same strategy now using tactics. Okay? What we're going for on the higher time frame is this. Has that already happened? Maybe, actually. It might have already happened. Why would I say that? Well, let's take a look. Okay. So I don't know if it's going to do this now. It may not make it all the way back up to here. It may not. I don't know. But can you see, based on the logic that I explained, we could have already been here at the London Open. Well, I trade the London breakout strategy, so I wait for all the smart people with trade plans already done, enter all their trades, and then I let all the volatility go out, and I wait for it to drop, and then I sell it low for hardly any profit. Yeah, good plan, yo. That sounds good. Let most of the value go out so you get lots of risk and hardly any reward because you can't make a decision because you don't have a plan. Oh, I think I might have been facetious there. But anyways, this may have already happened, right? So we don't know. So if you are looking for price action now, you're already thinking short there as a plan A, or a second chance, which is a double top, which is your, oh, I wanted this pink, which is your plan B. But notice, either way, you're a bear and you have no cares in the world. Okay? So you believe it's going to do this, or it's going to come up and then we range bound and then we break. And maybe not today. Because, you know, Mondays, maybe not everyone's on the clue train yet. Maybe they need to think about stuff. Okay? Well, and then Famobix says, or weekly M3. That's a C. That's a C plan, but I don't want that because then that means we're range bound. But that is a plan C. But that changes things because I've lost my trend. Remember, we set all of this up on trend. So that would give us a scenario of M3, because I count this as a front run, to M2, to M3, to M2, to M3, and basically we're range trading is the plan C. But I don't really want to be a range trader because this is what I want. because I'm a bear. So I need the regression channel, right, to keep moving. Okay? So you can see based on this, we're flattening out. And I'm not sure if the standard deviation diminished a little bit or not, but that's not a big deal. Okay? So anyways, guys, let's drop in smaller now. Okay? Let's drop in smaller, but let's mark this. This is a plausible scalp in here. Let me get that as straight as possible. Seems about right. Do you see why I say it? Let's go all the way here, actually. Okay? The reason I picked this line is technical analysis. We're on tactics. All there is technical analysis here. Because we already looked at this. We already made a decision fundamentally to be a bear. And then on the long time frame, we already determined to be a bear. So there's nothing there. This is only tactics. And based on technical analysis, this was important, this was important, 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 as resistance. Then it was important as support, then it was important as support, then it was important as resistance, as support, as support, as support, as support, as support, as support. Now it might be important resistance-wise, right? You see what I'm doing here? Could be a rabbit. Could be a rabbit. Could be. So there's our plan A. We don't know if it's going to be important, but it might be. Okay? What's the next one? Well, maybe in here, right? So let's clean this up so it's easier for everyone to see. We've already made our strategy plans. Oh, I got to do it this way. We've already made our strategy plans, so we don't need a lot of the tools anymore. Like, we already know we want to sell there. We don't need pivots. We've already made decisions on a lot of these things. And I don't know if you want moving averages or not. So they're really, maybe on the smaller ones you could. Oops, then I deleted the wrong one, didn't I? Delete. That's the 55. So we can kill the 55. Let me, oops, man, clicking every wrong button. Insert indicator trend moving average, and it's 160. Orange. Where is it getting that from? It's weird. Usually linear weighted. Really? Did I click the right one? Wow, that is weird. It almost always comes up 55 red EMA based on my charts, but that's weird. All right, where's my fire brick? Crimson. Ooh, I love crimson. All right, this should be EMA. Like, oh my God, who put this here? And then make that 5. Close. I'd like this on the open for the 5. I don't know why. It just seemed to work better. And it shouldn't be that fat, but I think you'll get the idea. All right, so now we're interested in this price. We're interested in that price. So now you drop into a small time frame like a 1 minute. So somewhere in there, we want to see something happen. What do you want to see happen? Hey, Sharif. Have I gone through a USD yen? No, and I don't think I will today. In fact, I feel like we've gone overboard already today, so I'll have to leave that for tomorrow. Oh, a reversal pattern. Can you be more specific? Yeah, lower low. That'd be part of a reversal pattern. Right? All reversal plans, bearish reversal plans, meaning to turn a bullish trend into a bearish trend, they all would include some sort of lower low and then a lower high, right? When does it end? At the end of the season. 5A cross. Yeah, all of these are right. And this is all your decision-making process, right? So you could do a 5A cross down, but, right, you really want to be at your price and all that kind of stuff. So 5A cross down, or a reversal pattern, or a lower low, but I would say lower low, lower high combo, lower low, sorry, let's redo that for clarity. I would argue really what you want to see is a lower low, lower high scenario, and then a 5-8 cross, which would look like this. Up, down, up, and then 5-8 cross down here. Okay? But the thing is, it's that we're up here and we know we want to sell. That's what it's all about, you know. Okay? The rest is just fodder. Okay? This is how you should trade. This should be easy. Now, we're scalping on a 1-minute chart. So what? Right? Someone that doesn't know what they're doing makes 12 pips. Someone that knows what they're doing makes 20 pips. I plan on making 2,000 pips. But it's the same 1-minute chart. I just have a legitimate trade plan. And most scalpers do not have any trade plan. And then they'll convince you, price tells you everything. Oh, really? It must be so convenient, especially when you don't know anything. Can you imagine going through life thinking that? Like, so you don't analyze anything, huh? Must be very convenient. So pro trader says scalping is risky. In this case, I'm scalping into my position trade. Why? Because it's money, Danielle. And why use a limit order? Because you haven't confirmed anything. If you just throw down a limit order, you're gambling. You're saying, I bet you it's going to fall here. That's a bet. Okay? But if I say, I think it's going to fall near this price, and I'm going to confirm it with technical analysis, like a reversal pattern at the exact price or near the exact price, I thought it would reverse. But bear in mind that I'm showing you these strategies first on a 4-hour, where some of these trades you have 16 hours to set them up. Okay? 16 hours. You have enough time to be patient. And then you see the trade strategies. They're worth hundreds and hundreds of pips. So why would you scalp for 12? So you have all this time to sit and wait in your zone to have the market convince you that market conditions are favorable and are ready and agreeable to your plan. And the market says, Danielle, this is the market, right? Hey, Danielle, this is the market. We love you so much and we love your plan so much. We'll put this together for you and help. I think when you're shorter term only, you make money when you're lucky enough to have the market forces behind you. And then you do the same thing and then you lose money and you're like, I'm not sure why I lost money on this. Well, the market forces have changed, but you're still doing what you used to do. Right? And then, but you think it's because of your trading. You think it's because of your technical analysis. Like, well, I bought it here and the oscillator did this and it worked out and I made money. But then I did the same thing later, doing the same thing on the moving averages, and I did the same fib and I did the same oscillator, and like this time it didn't work. And the big question is like, why? Why is this not working? It worked 2 or 3 times in a row and then it didn't work again. Well, but those traders are not looking at the bigger picture. They're not even looking at tomorrow, yet alone what's going to happen 3 months from now, right? And so what happens is you kind of get lucky, not quite lucky, but your technical analysis that you traded just happened to coincide with a market condition, and then you traded it for a while, and then you get unlucky, so to speak, where the market condition has changed on a higher time frame and you don't see it. So you did what you did yesterday that made you money, and then tomorrow you do it and then you lose money and you're like, I don't understand why this has happened. Right? You see what I mean? And you're like, well, it worked yesterday and I did the same thing and now it's not working. And well, now you're buying into a zone in which bulls on a 4-hour chart or something, right, are actually preparing for the longer term down. So you bought it for 2 days and made a lot of money and you thought you were a genius. And then for the next 2 days, you keep buying it and you lose money. And now you worked for 4 days and you didn't make any money. And you're like, what's going on here? Why didn't it work? It's because maybe you don't know nothing. Okay? So anyways. Okay? Anyways, I will see you guys tomorrow. We have a whole wonderful week of all kinds of fantastic news. Lots of Aussie this week and CAD this week. And there's yen meeting minutes to read. And we've been blessed as currency traders with lovely amounts of news. Absolutely fantastic week ahead. So I'm looking forward to it. I enjoyed myself with you today. No, look at that euro. By the way, did you notice pop right through our resistance lines? Yeah. Anyways, we've been blessed. I've enjoyed myself with you today. We have all this opportunity to look forward to the rest of the week. I'm really happy to spend this time with you. So thank you very much. Remember, please like, please subscribe, and please comment. And the reason for all of these things is if you value this community being in your life every day, you need to help YouTube sort through thousands of Forex videos posted every day, most of which are maybe not that helpful. If you think this community should be promoted more by YouTube as quality content, then you need to participate. You need to contribute to that. You need to help YouTube. So comment, like, subscribe, and say, YouTube, this is what people need. This is what you should promote. I'll see you tomorrow, guys. Cheers.